Hey, I'm Jack Milligan, Editor-at-Large at Bank Director. We just finished up day one of the Acquire Be Acquired conference. And it's a really interesting time in banking, and a lot of reasons why it's interesting were things we talked about today in various presentations. The rate increases we had last year from the Federal Reserve were almost unprecedented. We haven't seen rates go up that high, that fast in several decades. And initially that was good for banks because it enabled those banks that have variable rate loans in their portfolio to reprice those loans. And that helped increase net interest margin. But as we get into 2023, deposit funding, the costs are beginning to catch up. Depositors want higher rates, and that's going to narrow net interest margin the further we get into 2023. The other problem, of course, is the fact we may have a recession this year. Forecasts about that are all over the lot, but the general consensus seems to be we could have a modest recession this year. So what's the logical strategy for banks this year? I think it comes down to three things. Number one, pay really close attention to your core deposit franchise. Try to figure out who you're likely to lose, because you're going to lose some funding, who you're likely to lose, what it may cost to keep them, because you're going to have to pay a little bit more, everybody is, but it's still going to be cheaper than if you have to go into the wholesale funding markets to replace those deposits. Number two, pay very close attention to your borrowers. One of the reasons why, as I said before, net interest margin increased last year was because a lot of lenders have variable rate loans, and they were able to reprice their loans as rates went up. But if we get into a recession, some of those borrowers who are now paying more may have problems servicing their debt, and I think you want to anticipate who some of those borrowers might be. And number three, I think you want to practice safe growth. Certainly you have to service your best customers, and there may be an opportunity to pick up good customers from other banks that have funding issues, but you don't want to do crazy things. You don't want to lend out of market. You don't want to lend into asset classes you don't understand. I think what you really want to do is be careful and cautious this year and set yourself up for success in 2024.